Welcome back. You're watching Wealth Manager. Rubi Arya, Executive Vice Chairman of Milestone Capital, joins in now to talk about their real estate funds. Thanks very much, Ruby, for joining in today on the show. So let's start with talking about the latest fund that you've launched, the Milestone Opportunities 10, if I'm not wrong. Take us through the structure of that fund.
Sure. So thanks, Avni. Thanks for having me here. So just to tell you a little about the fund that we are raising, it's a high-yield structured debt product in the mid-income residential space. And the idea is to not only focus on returns, but on capital preservation, regular cash flows back to investors. So the idea is to invest with developers who have a good track record of having executed projects in the mid-market segment and, and make returns and monies for our investors. We are targeting returns upwards of 18 to 24%. On this fund.
Right. So essentially, I mean, that's been the kind of returns that you've been generating across all the funds that you've been raised. Take us through the kind of returns trajectory that you've seen and what are the challenges that you've faced in the past?
I think the returns overall have been very stable and consistent. I think what is very important to note is that, on investment strategies which were focused on pre-leased core and core plus assets, it was a moderate risk and a moderate return kind of, investment strategy that we had, because the only risk that you were taking was a leasing risk. Whereas on the residential side, where of course you took, you did structured debt deals, we did very little of equity deals. We've done, equity-like returns, but with a debt-like security. Okay. And I think in that case, in both the investment strategies that Milestone has successfully adopted, we've been able to give mid to high teen returns to our investors.
Okay. So in the current market situation, in the environment that we're seeing today, do you think structured debt is the best way sort of to go forward?
I think structured debt is going to continue for some time, and I think we started with pure debt, we came down to structured debt, mezzanine structures, and now more of hybrid equity, because I think it's all a question of demand supply of capital, and in a capital scarce environment, obviously structured debt is the way to go, and there is still a lot of developer stress in the system, which is an opportunistic thing for fund houses like us. So what we've done is a 3.5-year fund, which is the shortest fund life amongst its peers, and idea is to get into deals with a quick turnaround, 2 to 3 years of gestation period, and make returns for our investors. And our experience has been that we've got a lot of times refinanced by banks and NBFCs, which obviously kick in at a later stage. So for that small stack of capital that you can provide for that short period of time, I think structured debt is still the best way to go.
Okay. So, what would you say your outlook is as far as the real estate market is concerned? Because it's been facing in the doldrums, in fact, for quite a few years now, and there's always been talk that it's going to pick up, but we've not really seen that pickup coming in.
Sure. No, I think the overall outlook is definitely positive, and I am pretty bullish on the long-term prospects, for real estate in this country, with the kind of efforts and the direction that the government has provided and the kind of policy initiatives and reforms that have been announced, so we could talk of REITs, there is the housing for all, smart cities, foreign investment being eased into the country. I think all of these are definitely, reviving the interest in real estate, and as we speak, I mean, there is so much of money, both offshore and onshore, flowing into the real estate sector. So while, there is oversupply on the residential side, but I think it's slowly stabilizing. Demand will pick up, and I mean, housing loan rates have to come down in a falling interest rate scenario, which means that overall, I think in a consumption-led economy like India, where, jobs are growing, economy is generally moving forward, and with the macroeconomic indicators, whether it is the GDP or the inflation, most of those things under control, I think real estate sector definitely is going to grow. I am very bullish, particularly on the commercial real estate side as well, because it has totally bottomed out. The recovery has started, and as we speak, I mean, leasing, if it would take 6 months to lease a property, today we are finding that we are able to do it in 2-3 months because the supply of grade A assets is not there, whereas the demand is growing. So, last year itself, we had an absorption of 34 million. This year, they say it will be 40 million. So I'm saying there is, I personally think that it's a very, very important time for investors to get into the real estate sector and make money for themselves.
Right. So what's the kind of HNI interest that you're seeing as far as, such kind of real estate funds are concerned? Is that something that's picking up traction, and how do you see that trajectory panning out?
Sure. No, I think there is definitely traction, from the ultra HNIs, from family offices, corporate houses, and even insurance companies. I mean, we have one of the biggest insurance companies of the country who's participated in our fund, which means that despite slowdown, and despite the fact that there is oversupply and despite the fact that demand is yet to pick up, people know that, so you see, whenever an investment is made, it has to be made with the exit in mind. And if the overall indicator suggests that demand is going to pick up and absorption is going to happen, obviously it's a good thing to do, because 3-4 years down the line, when you need to exit from the fund, there will be many takers. We recently sold one of our assets to Blackstone, which was the largest exit by any fund house, which we consummated last year. And one of the reasons why we were able to do that is because when we were selling, there were so many buyers in the market. And I think while anyone makes an investment in a fund house, because we are all close-ended funds, it's very important that we have to keep the exit in mind. And I think HNIs do understand the importance of that. So while I'm raising a structured debt residential fund now, the next plan is to do a commercial product as well, because HNIs are showing a lot of interest, with rental yields northbound 9 to 10% and capital appreciation because of the yield compression which will happen. I think it makes a overall very, very good sense for an investor to lock in his money at a 16 to 18% kind of a return on a commercial pre-leased core product.
Right.
So there are, fund houses will keep coming up with various products. I think what is important for an investor is to go with the fund house who's got a track record of taking and giving back money.
Right.
I think that is very important.
Right. So as far as REITs are concerned, what's your assessment there? Because we did have some announcements in the budget, some tax breaks that came in. We've had players like DLF saying that they're ready to launch REITs. How do you see that market really panning out? And you also do have some private REITs, if I'm not wrong.
Sure, yes. So we were the first ones to do the private REIT-like structure, and we had a lot of retail investors who participated in the REIT. And, I think the REITs, with the kind of, the final guidelines which have come from the government and the tax, whatever hiccups were there which have been sorted out, we should see the first REITs, taking shape in India. And I think a lot of participation to begin with from institutional investors. I don't know whether the first REITs will be by a developer or institution or mixed, but I'm very hopeful that REITs will open up this entire commercial office portfolio to retail investors and give them a chance to, make money, to participate and make money. So when we did the REITs, obviously it wasn't listed because, the guidelines weren't clear, but we operated very much like a REIT in terms of, buying properties, collecting rents, giving it back to our investors. So far we've distributed 30 quarter of yields to our investors, and obviously when you exit the property, you make capital returns at the time of exit.
Right.
So I think we've done REIT-like structures, but yes, I think when the listed REITs do happen, it will be a very, very good thing for an Indian retail household to participate in the Indian real estate growth story.
Right. So Ruby, for investors who are looking to put in money as far as real estate funds are concerned, what would be the advice for them in terms of if you were to compare real estate funds to investing in direct real estate?
See, I think the advice would be that it depends on what is the money that you want to put out. I mean, if you want to put out and participate with a 1 crore check, obviously you can't buy direct real estate with it.
Right.
And what a real estate fund house allows you with a minimum ticket size of 1 crore is to participate in not only sub-asset classes of real estate, depending on what is the product offering, but also geographically spread your risks. So, diversification of your portfolio, you can participate in a Mumbai, NCR, Bangalore, whichever are the micro markets that are doing well, with the help of the fund house. And obviously, if you have a larger ticket size with you, if you can put out 20-25 crores, you could want to buy direct commercial, asset as well. So sometimes going with the fund house allows you to, with a smaller ticket size of investment, make good returns and healthy returns, and not go through the hassles of trying to do a legal due diligence and hiring lawyers. And, so the headache, I mean, you are partnering with people who know their job and who have the expertise and skill to manage your money.
All right, Ruby, we'll leave it there. Thank you very much for joining in. All the best for the fund.
Thank you, Avni. Thanks for having me.
All right, time for another quick break. On the other side, we'll tell you how the gold monetization scheme has become more attractive. Stay tuned.